Hello and welcome to HSC Business Studies Lesson 5. In this lesson we're going to look at the influence of government. So we're looking at influences on finance. The first thing we're going to look at is ASIC, the Australian Securities and Investment Commission. Now ASIC are a body which reports to the federal government, which means at the moment the Liberal Party. So any government which is in government in Canberra. They do a few different things. The most important thing they do is they regulate and they look after finance by big corporations and the share market. So they administer corporate legislation. They make the decisions on how corporations should manage their finances. They regulate company takeovers. So if another company wants to take over a smaller company, they regulate how that is done. They set the conditions. They monitor issues of shares. So if a company decides to list on the stock exchange, they will monitor how those shares are issued. They report to the Commonwealth Government on all these issues. They make sure that company directors, the directors of big companies, are doing the correct thing. Their ethically standards are correct. And that they monitor the ownership of businesses and the annual financial returns that businesses send in to make sure that they are producing ethical business reports, that the accounting practice is done correctly. Now, if you read the case study on page 174 to 175 of your text, that will give you much more information about ASIC. The next influence of government is taxation, corporate taxation. At the moment, the tax rate for corporations, limited partnerships, and trustees or public trading trusts, so big companies, is 30%. So 30% of their net profit is taken as tax by the government. Now that has a big implication if the tax rate goes higher or goes lower. And we'll talk about that a little bit later. The next area we'll look at is government policy. One of the government policies recently, and that you've looked at recently, is the China Free Trade Agreement, where the Australian government and the Chinese government have decided to come to an agreement to reduce tariffs, or sometimes take away tariffs, on products that are bought and sold between the two countries. It's specifically very evident in the agricultural sector, where primary industries, primary goods, cattle, sugar, crops can be traded not for free, because that's not the concept of free trade, but at a reduced tariff or no tariff at all. It opens up the market, it opens up trade between the two countries, and it has a big impact on not only exporters from Australia, but it has a big impact on the companies that are importing into Australia. It can produce a system where goods are a lot cheaper to import into Australia, and that places a lot more pressure on the companies in Australia that are selling those goods. So a free trade agreement and different trade agreements really impact how big businesses can operate, and government decide these things. Another influence of government is something that's happening at the moment around Australia, and that's the GST debate. If you read the following article, which is a link in your Google Classroom, this link is called The Great GST Tax Debate. Currently in Australia there is a big debate of whether we should raise the GST, the goods and services tax, from 10% to 15%. It will mean that the government can receive a lot more revenue, which can go to the states to pay for things like hospitals and schools and roads and the police. It's a fantastic link to read. It tells you all about the debate. If they're successful in doing that, the government is saying that they could give tax reductions to businesses. That reduces the company tax rate from 30% to say 28.5%. That would have a big impact, hopefully, on businesses. What impact do you think this policy would have on small and large businesses in Australia? How would it benefit them? One of the next areas we're going to look at is global market influences. This is the idea of globalization and funding. Now, with the advent of globalization over the last 30 or 40 years, businesses have been able to access funds or capital, not just from internally in Australia, but from all around the world, specifically recently from Asia, including China. Australian investors are also able to invest their money internationally to get some return on their investment. So there's much more scope for people to get money and receive money. China, as you know, is a growing economy, a growing country, and China have a lot of investments based on resource companies in Australia, like mines and agricultural centres. There is an increase in debt financing because of this. It means businesses can go to China and receive large loans. Another global market influence is the economic outlook. Australia as a country is what's known as capital importing, which means we don't have enough money to go around to do all the things we want to do in business. So we must import capital from outside of Australia. The global financial crisis, which was in 2007, 2008, up to 2009, caused massive instability around international financial markets and also in Australia. At the same time, share prices went down, and that was causing instability in Europe. That meant that there was not a lot of money around the world to be distributed. Banks were very unsure about lending money to lots of different companies and businesses and banks around the world. So banks around the world started to not supply money. The article in the Google Classroom talks about the current economic outlook, whether share prices are going up or going down, whether there is confidence in the economy. It's really important for the economy to have confidence, to be in an upswing or a peak. Once that happens, lots of people have employment, businesses feel confident to borrow money, and banks feel confident that businesses can repay that debt through interest payments. Have a read of the article, which is entitled ASX Share Market Carnage Wipes More Than $4 billion from the Market, and ask yourself, what does this suggest about the current economic and financial outlook? Another global market influence is the availability of funds. A lot of international investors, international banks, international finance companies see Australia as a very, very, very safe place to invest their money. There are good rates of return, which means they can invest the money and receive good interest or dividends back on what they're investing in. A lot of international companies have decided to set up their branches in Australia and be part of the global Asian, Australian, Pacific economy. There are lots of links between companies around the world. Qantas and British Airways have decided to combine. They have lots of code share flights. Some of the flights start in Australia, change in Asia onto a British Airways flight, and they can combine and use their resources really, really well. They can invest in each other. One of the big issues of global market influences is the fluctuation of currencies and interest rates. Most of the world's trade is conducted in US dollars, which means that people distribute their payments in US dollars. Currently, the US dollar is worth approximately, the Australian dollar is worth approximately 70 US cents. A couple of years ago, it was worth 90 US cents. The financial crisis in Europe in 2007-2008, as I said, made it really difficult for banks to find money to lend to customers. So there was a credit crunch. Money around the world dried up. Changes in interest rates, so the cost of borrowing money, can also impact investors and the rise of businesses. If there are very high interest rates, that will attract investors to put their capital in businesses in Australia, to loan money to businesses in Australia. If there are low interest rates, they may look elsewhere around the world. A question for you based on interest rates and currency fluctuations: how can a business use hedging and derivatives to help overcome these different fluctuations? I'd like you to add those answers to the Google Classroom.